Welcome, welcome, welcome. Today I have the honor of bringing to Just Minding My Business Mr. Pazzia, who helps companies, real estate owners, and CPAs unlock proven tax strategies and incentives created by Congress so they can invest in growth. He has been doing this for over 25 years. Mr. Pazzia
Pazzia.
Pazzia, thank you.
Eh,
Get this right. Started his career at the big four accounting firms, not as a CPA, but as a structural engineer. He became recognized. He became a recognized leader in the cost segregation field, serving as a former president of the American Society of Cost Segregation Professionals and sitting on their board of directors for a decade. Wow. Welcome, welcome, welcome. I'm glad to have you here. We always like to talk about money, finance. So, my first question to you is what is cost segregation? What is it?
Yeah. Yeah, sure. Ida, first off, thanks for inviting me to the show. Really glad to be here. And yeah, so cost segregation's been my specialty for a long time. And what it is, it's for real estate or businesses that own real estate or any investors that own real estate. And so cost segregation is a way for real estate investors to pay less in taxes by speeding up how fast they write off parts of their building. So normally, the tax rules say that you have to write off a building really slowly. So if you buy a building for your business, normally you depreciate that over 27 or 39 years, right? But not everything in the building lasts that long. And so there's things like vinyl flooring and cabinetry and wiring in the building that you can actually write off much quicker, okay, than the 39 years. And so a cost segregation study, it breaks out a property that you bought into pieces and you get to write off a lot of those pieces in year one, right? And so you get a much bigger tax deduction by doing this instead of spreading out those deductions over decades. And so I can kind of put this to numbers, right? So let's say you buy an investment property, a rental home, okay? It's an investment, and you pay it's $270,000. Normally, you get to write off. Normally your deductions would be about $10,000 a year for 27 years, okay, for rental properties. If instead you did a cost seg study on that rental home, you would get about 25% of that would be considered short life property that you get to write off in year one. So that's $54,000 of deductions versus the normal $10,000 deduction. So you get a big jump by doing this, and that's kind of the name of the game in real estate is taking getting your cash flow up as high as possible as early as possible, and so that's what cost segregation does.
Okay, that's very, very interesting. So, what about if an investor works a full-time job as well as have real estate? How's that work?
Yeah, so when you when you're a passive investor, like you have a full-time job, let's say you're a lawyer or doctor, um, and you invest in rental property, there's a couple of considerations here. So normally you don't get to go buy real estate and create these deductions, right? You can pretty easily create paper losses on real estate through depreciation, like I just described. And So normally you're not allowed to use these paper losses that you from real estate and apply those to your other income that's not real estate related. So that would be considered a passive investor. And so if in the real estate world, if real estate is your business, that's all you do. The tax rules are super friendly to you, to where most people in the real estate game pay very little tax. But most normal people don't meet that definition in the tax code of what a real estate professional is. And so they kind of have to keep their income from their normal business separated from their real estate income or losses. And so cost segregation can still benefit you as a passive investor. You just have to have passive income from your real estate. And so, as far as, when does cost segregation make sense? It really comes down to one, do you have income from your real estate properties that you're paying taxes on? If the answer is yes, then cost segregation will benefit you.
Oh, okay. Okay. So tell us about the software that you work with, the residential cost segregator software. How's it work?
Yeah, yeah. So cost segregation's been around for a long time, and normally, a lot of bigger real estate companies, even corporations like retailers like Target that own their own stores, like they've been doing these cost seg studies for a long time. And normally the IRS wants to see somebody that's qualified with an engineering background come in, go visit the property, do an analysis, list out everything that should be written off quicker. And this can cost thousands of dollars. It can cost, tens of thousands of dollars, depending on the size of the property. And so we launched a software, a self-service software that allows smaller investors to do these studies themselves. They can go to our website. It's costsegregation.com. And if you have a rental property, you spend about 10 minutes on the site answering questions about it. And instead of paying $5,000+ for one of these studies, you can get it done for about $500, and get some pretty massive tax savings from it. So the software we have, it's like I said, you can go to costsegregation.com to go straight to it. And if you have a residential rental property, that's 6 units or less, you can basically do it yourself and realize these tax savings.
Wow. That's amazing because, just listening to you talk about cost segregation, that's got to be very tedious work and definitely detailed work, to say the least. And like you said, most smaller investors, they can't afford the money to be able to pay for having someone come out to perform cost segregation for them. So having this software is definitely key to helping the smaller investor. So what makes this tool unique compared to other cost segregation options?
Yeah, there's only a handful of firms that do this with software like we have. We were the first to launch it back in 2016. So for $500, our software includes audit support. It also includes the recalculation of depreciation that is typically needed by your tax preparer to get it on the tax return. Um, and yeah, like I said, we're unique because we're one of the largest companies in the country that does cost segregation studies. And so we're not a software firm. Software is a smaller part of our business, and our bigger business is we have, it's a large team nationally that has been doing this type of work for 25 years. And so if it does get audited by the IRS, we'll stand behind it and defend it and make the IRS go away.
Okay, so can you give us a little success story for the cost segregator?
Yeah. We had a client, a user of that software that um, was audited by the IRS, and the IRS was, um, it's funny that the IRS is going through their own issues right now
Yeah.
with all of the cuts in the government, but um, this this was initiated about a year ago. The IRS was really getting in there and starting to question, the validity of the study. A lot of times, the IRS agents don't really understand lots of the different parts of the tax code, things like this. And so we got involved and essentially showed the IRS exactly how the analysis was performed, all of the calculations that went into it. And the IRS was, frankly, they were impressed that we were able to uh, do this level of detail with the software that we had, and they went away. They didn't make any adjustments, so the taxpayer was thrilled that they didn't have to give back any of these tax benefits that they received.
Wow. Wow. And they probably, I mean, you probably were educating them, because like you said, the IRS, not everybody knows everything in the tax code, because I'm sure the book is probably super thick, and not all of them, because of the volume of work that comes in, you have to really educate yourself as things present themselves. And like you just said, the cost segregation is not a real thing that they're really versed in.
Yeah, that's right. I mean, it's not super common, like for most taxpayers, right? The IRS definitely has teams of people, like kind of at a higher level that really understand this stuff. But when somebody, that initial auditor, that field agent that
Yeah.
first opens up an audit with somebody, they they're very uneducated on how it all works. And so yeah, there's definitely some hand holding that goes on.
Yes, I can imagine so. So what's the next big thing that your company will be offering?
Well, before the show, I was telling you one of the things that we also do as a firm, KBKG, we do a number of other tax incentives. One of them is called the Research and Development Tax Credit. Okay, and this R&D tax credit has been around for since the 80s, right? It's, you know, something that I think is very well known because a lot of other countries have R&D tax credits. It's kind of like a competitive thing in our country that we want the good jobs here in the US. We want, STEM jobs, the scientists. We want the innovation here, right? And so one of the ways that we incentivize that is by this tax credit, the R&D tax credit. And so how it works is any business that is doing R&D um, gets, you look at how much they spent on the R&D, and I'm going to simplify this, but you get about 10% of the spend back in the form of a tax credit. Okay. So if you're let's say, a startup software company, and you have 6 or 7 employees, They're all doing coding of software, trying to build something. Um, let's say you got about $500,000 of payroll for those people, right? And they're all doing what I would call qualified research. Okay. You'd get about a $50,000 credit, right? $500,000 of qualified research. Um, and the credit's worth about 10% of that. And you would get that every year if they're continuing to do what we would call qualified research. Um, so yeah, qualified research is basically when you're trying to develop a new product. So it doesn't have to be software. It could be some widget that you're trying to manufacture, right? All these people on Shark Tank that are inventing things, like there's time that they're investing to figure out how to make these things better. It's that time, it's the cost of the people that are spending the time, or the prototypes, the supplies, et cetera. All those costs are eligible for this credit. Um, so we've been doing that a long time, Ida. We've also created a self-service software product for that as well. Okay, so normally we're working with these huge companies that are spending tens of millions of dollars, right, and getting, $1 million of tax credits. But a lot of the smaller businesses, listeners of your show, it's harder for them to claim this credit because it's usually not worth hiring a third party to come in if the credit is very small. So we have this product called Dash.tax, right? And you can go online and start inputting your information about your business if you think you qualify, and it'll tell you how much your credit is worth. Uh, you can basically go through the entire process and not pay anything until the very end when you know roughly how much your credit is going to be. And then the cost to run that report would be $2,500. So you might get a, $40,000 credit. The cost would be 2,500 bucks to run this report, which basically gives you the IRS forms and everything you need to claim the credit on your tax return.
So if you're doing the research, like you said, I know quite a few businesses that create products. Okay, so what is the minimum amount you can use this product for?
Yeah. Well, first off, I should say, the research has to be done in the United States. Okay.
Okay.
I mentioned software, right? And a lot of times people are building software here, and they have some people here, but they also are hiring people offshore, right? And so any portion that is being done offshore does not qualify for this credit. But to answer your question, um, what is kind of like the minimum? So I would say if you're spending, you know, 100, about 100, you feel like $100,000 or more on costs in the US, whether it's labor or materials, it's probably going to make sense for you to use this software because, just off back of the envelope, you're going to get maybe a $10,000 credit, right? So, yeah, and you could be a little bit less. The credit might be $7,000, but yeah, at some point, right, it's maybe not worth doing it if the credit is too small. But but like I said, you can go in there, dash.tax, you can enter in all the information for free, just to see where the number lands before you decide to pay.
Okay,
So
and
it's right.
what types of products would qualify for this?
Yep, it's very broad. It could be anything. So it's um, the key is what you're doing to create the product. Okay, so um, if you're I don't know, creating, a new hand cream or something. Um, if you're spending time trying to figure out the formulation that's ideal and you're testing and there's uncertainty, like how is this going to come out? And oh, I want the hand cream to moisturize or have other kind of properties about it. The criteria to be eligible for the credit is that the activities that you are doing, there has to be some level of science involved. So whether it's chemistry or engineering principles or physics, right? It has to be some level of science. It could be computer science, etc. The second thing is there has to be some level of experimentation. Like you can't like kind of know exactly how this is going to end up. There has to be uncertainty. Um, and there's a couple other kind of rules that kind of fall in line with that, but those are kind of the two kind of key areas that for your listeners, I mean, if you're doing those, if you're doing things that kind of fall into those categories, it's worth looking at.
Mhm. There's been so much information, Mr. Pazzia. Did I say that right? I cannot
Yeah,
get his name right. Did I say it right?
you got it now.
All righty now. Yes, this has been a lot of information. And I know that my listeners and viewers are going to definitely, especially the real estate investors that are a part of my listening audience, they're really going to love this because I know probably the smaller investors probably don't even do cost segregation. Probably don't even do it because it's very tedious and they probably don't even know there's software available to help them do it. And then you also added in a bonus for, research developers, that
Yeah.
can, get tax deductions for, the research that they're doing to create their product. So, wow, lots of gems today. So I appreciate it. So I am so grateful that you decided to come on my show and share all of this good stuff with my audience. And I know my audience is grateful as well. So thank you so, so much. Pazia.
You're very welcome, Ida. I appreciate being on.
Absolutely.